Dude, these people don't want to count.
Oh, here we go.
They don't want to count. Dude, let me tell you something.
Your tweets.
Let me tell you something. I tell people that I've been buying transports and they laugh at me.
Dude, how about that triple?
No, Spencer's one of the people who laugh at me. I pulled out a chart of expediters the other day. Spencer almost fell out of his chair. He's like, "What the fuck is this?"
I probably did think I said that. I don't
Dude, as soon as I saw your reaction, I went about more.
Okay. Good. I'm glad I could be. I live to serve.
No, I mean, listen. I probably talk to more people than both of you combined, and then some, right? But Strazza also talks to quite a few people. Maybe not to my level of, not to my extreme, but Strazza talks to a lot of people. Do anybody ever laugh at you when you tell them something normal, not like some random meme coin, but like an actual stock that should not be hilarious when you buy it? Do you ever get that? Because I never do, but I'm getting it now.
Yeah, and with China. More than most things. Maybe not even so much laughed at, but you're talking about like a strong reaction, right? Because that kind of triggers
what the fuck are you talking about, JC? Like one of those,
Yep, get that with China more than anything. I think.
Look at this guy. You see this guy?
Oh, okay. Hold on.
All right, hold on. Let me guess. 2016.
No.
Hot gold. Ready? Look at this part right here. Elevate your portfolio.
No.
This was probably close to 10 years ago.
This was October of 2018. Go throw up slide 2 there.
2018. Good job, Steve.
That's the last time people said nice things about these stocks.
Hold on, go look. Nice, right?
Nice. What are we talking about?
This is when Spencer was buying those pot stocks. That's why he knows them all.
There were several windows of time.
Is this a good one?
You have to be more specific because that happened more than once.
Such a good one.
Yeah.
So I gave 2 presentations last week on the magazine cover indicator, and people loved it. I gave 1. They wanted more. I did a part 2. Guess what? They want a part 3.
No, I want to see it.
Didn't I send you the deck? I thought I sent you the deck.
I just got in front of my computer for the first
time. Strazza's been on vacay.
So
vacay, keep money mode.
What I'm wondering about the transport situation is, who were the people who had to sit in the boardroom one day, probably a couple months ago, maybe even a couple quarters ago, and they thought on some ideas probably together, and they said, you know what the world needs? You know what the capital market world needs? A XXX leveraged long transports ETF. Like, who made that fucking decision? That's what I want to know. Nobody trades the 1X transports ETFs. There's barely any liquidity in them, but now we have a 3X leveraged long. Oh, interesting, to say the least.
What happens when the 3X becomes way more popular than the 1X? It's not the transports that's interesting. It's the leverage.
I'm rooting for it.
The Dow Jones Transportation Average, it doesn't even have an ETF.
I think we'll probably
I learned last week.
I mean, the Dow Jones Industrial Average has an ETF that nobody trades.
Yeah, that's true.
All
right, come on. Let's start the show. Enough of this. We're blabbering way too long. All right, good morning, everybody. This is the morning show, and boy, do we have a lot to discuss today. We have one step closer to government reopening. We have markets rallying on that headline this morning. We have charts, and more charts. Dean Christians is our guest today. He'll be on at 9. We'll have Kenny. We'll have Jason Purrs. We'll have you. We'll have the guys. Did I mention charts? Because we have a lot of those. So let's get to it. Let's bring on Steve and JC. Where'd they go? Let's bring them back out here. Good morning once again. And busy morning. Last night was a futures night for me.
Am I getting $2,000? I'm thinking no.
Are you getting
$2,000?
Yeah, everybody's getting $2,000 unless you make money.
Oh no.
That $2,000. Yeah, I don't know.
I'm probably not getting shit, huh?
No.
You could pay higher taxes. That's what you could do.
I'll pay higher taxes. Got it. All right.
Raise your hand.
Tells me that if I want to stop paying so much in taxes, I should stop making so much money.
Raise your hand if, like
he tells me
me,
that every year.
Raise
The
your
only
hand
way to do it.
if, like me, you were looking at the futures last night because it was a futures night.
I peeked at the cryptos.
Yeah.
Dude, every
Cryptos is
Sunday
juicy.
night, I have to explain to my wife's grandfather how the market opens at 6 p.m. Eastern time. And he's like, oh, like Asian markets? I'm like, no,
Nope.
all of them. He's such a good egg because he actually cares. Like, he's interested, you know? He's like old school, you know, like Mason guy. You know, he would build like stone walls and shit.
Yeah. Had a real job.
Yeah, he had a real job, but dude, his
Yeah.
forearms are like jacked, you know, and he's like 1,000 years old and he's like, looks great, you know, he's like chilling, you know, because he was working out every day for decades, you know, weekends too. He was a hustler.
Darts are another great forearm exercise. Spencer,
Darts are a great forearm exercise. All right, is that like your water aerobics? You know, darts doesn't count, and the 12-ounce curls with the other arm, that also doesn't count.
Darts are basically curls. They're air curls.
Yeah, air curls.
Think about it. Think about it. You got a little buys and tries in there. Spencer, what did the futures market do to you? That
No,
I'm curious too. What were you looking at? Do you look at it every Sunday, by the way? Or just
No,
last night?
I look at it like once a quarter. You know, I look at it when
Really?
I look at it when something happens during the weekend that
Right.
that makes me think it'll be exciting on a Sunday night. And then last night was exciting because we get this headline that there was this preliminary vote in the Senate, and we're one step closer to the shutdown ending. And I know we don't really care about, you know, the shutdown as
I
it relates
do.
to, as it relates to markets.
Can I say that I care about the shutdown?
Maybe we care a little bit.
I care a
But-
lot.
why? What happened to you? I have a story from this weekend too.
You know what? It's a bummer. I got to
The
tell
bu-
you.
the
You know,
data.
usually I'd say fuck the government, keep them shut down. Nobody needs them,
CFTC.
right? That would be. I haven't been getting the commitment of traders report. And it makes me
CFTC.
sad.
Well,
You know,
listen.
and I got to tell you, I just want to apologize to everybody out there, including the CFTC. I took the commitment of traders report for granted. I shouldn't have done that. I apologize. You know, this is such a value add. We used to have a good time together every Friday. Spent a lot of time together, and you know, I miss the COT report.
You know, we come on here and we're pretty wise ass about, oh, the government shutdown. I don't even know. It doesn't matter, but it does gradually start to affect people's lives.
That's the point, right?
It does. Things more and more things shut down, not fewer things. Like, so we were stranded on the Virgin Islands. We got news Friday that there's going to be fewer flights and they're going to be cutting flights and all this shit. You're going to be stuck in an island airport when that's going on. It was absolute chaos. Couldn't
They
even
got
fucking
good
move.
bars at those island airports, though.
Yeah, but you couldn't get to the bar. Everybody was fighting in there.
All right.
So my
So
life
any-
was affected by the government shutdown. So I'm bullish ending the shutdown.
Yeah.
If we did a state of the
Come back.
markets, you would see that things are looking up this
I
morning.
also want to point out that as usual, the stock market likes government shutdowns. Stock market does tend to do very well during government shutdowns. More importantly, it tends to do very well after the government shutdowns. Every single time, market rips.
Stocks got hit a bit last week, though. No, you didn't see that.
I mean, on
You notice
paper
that?
in the headlines, certainly, but small cap technology hit new all-time highs last week. There were more stocks above their 50 and 20-day moving averages last week than the week before. So breadth actually improved last week. And the percentage of stocks on the New York Stock Exchange above their 200-day moving average increased throughout the week. So
What
the
happened?
headlines are telling you that the market's imploding, but for those of us who take the time to count,
I
there
didn't look at any
was
headlines.
actually breadth improvement last week. Is that funny, Spencer?
No, but
That's
like,
the second week in a row Spencer laughs at my data.
It
so when
is.
Sean comes on and tells you the same thing that I'm seeing, right, through his trading, what do you say to him? Same thing? Just
I don't give a fuck what he's seeing through his trading or you. I'm telling you what happened.
down, guys.
Your portfolio, I mean, listen, I know you're killing it. Everybody's doing great. And Sean is doing great. And everyone's making all this money. What the fuck does that have to do with me? I'm telling you what happened in the market.
Do you get stopped out of your speculative growth stocks?
I
when
got
you're
stopped
down
out of two.
40%?
I got stopped out of two names last week.
Oh, okay. Is that a normal week? Like, is that normal for you? Do you take
That
feedback?
was probably
from
more
you?
than that was more than usual. At least in the bull market, it
saying.
has been.
All right. So
Yeah, but my
On that
portfolio
note-
has nothing to do with the fact that market
You know
breadth
what?
improved last week.
I'll tell you the biggest thing that pissed me off about missing Friday was missing the one David Lundgren. You gave him a lovely introduction, as you always do. And I just want to second everything you said. He's truly one of the absolute best.
Yeah.
I went back and listened to the whole interview
I
because
should
David
do
is
that
just
again.
that
I should go
good.
listen to it again. And if you
He's one
guys
of-
haven't listened to it, Spencer, can you drop the link to Friday's show?
I
David
will,
Lundgren, absolutely the man. You know, he's humble. He's like, oh, JC, that's so kind of you. I'm like, bullshit. You actually are.
No, he's so smart. He's one of those guys. I just want to hear what he's saying every time he talks.
Totally.
So what a treat. How lucky we are to kind of have him on our
And
network.
you want to know something? Fuck you, Strazza. You know why? Because whenever I'm out of town or I'm doing something, you get Lundgren in. So now it's a little payback.
That's
now
true.
you were off
That's true.
gallivanting in the
I
Caribbean.
think that happened last time. Yeah.
You're right. That's fair. That's fair.
Yeah.
He said this is undeniably a bubble, and you didn't push back as much as I thought you would.
Listen, we're all entitled to our opinions, and I agree with him that whether it's a bubble or not doesn't even matter.
and that's the single best thing he said.
Yeah.
He almost pointed out the fact that like all this research I've done on the bubble stuff really doesn't fucking matter. It's like a fun fact for me.
Right.
The data is going to drive my
something we talk about over
right.
drinks, over cocktails. Like, should the semiconductors be the new transports? Like, whether that's the case or not,
right?
That's not going to change what we're doing in the.
He said
That
the
was a
same
great
thing.
point.
He said the same thing that Brian Lund said, and several others we've had on the show said, which is like bubble or not, great. When's it going to end? I don't know, right? Like, and that's the point, right? Is it going to go 2 more years? I don't want to not participate in that.
Dude, we'll go to the state of the markets now, but think about this. You have all these literally criminally insane people
who
go on Twitter every day telling you it's going to end badly. Oh my God, it's going to end badly. No shit, asshole. Of course it's going to end badly. When does it end in a great way? It's literally the end. Of course it's going to end badly. You've been telling everybody for years that it's going to end badly. No fucking shit. Thanks. You're an asshole. Go back into your cave. We know it's going to end badly. We know. Duh.
Logical place to dig in after some weakness. Let's see what they got. There's some key groups that I'm looking at for a big read. What?
It's going to end badly.
Well, and badly for who? And badly for the investors.
Maybe badly for the bag holders. Guess what? Right. Don't be a bag holder.
You think you could start to buy some of these weak groups, or you got to wait?
What do you consider a weak group these days? Actually,
Bitcoin, home builders, regional banks. Those areas of materials. Materials have been hit pretty good the last 2 months.
Not the metals and mining.
XLB, as of
you see some of these coal stocks. You see some of these coal
9% drawdown.
Dude, these coal stocks look great. You see the Warrior Met ripping last week.
I added to my coal exposure.
Industries.
Yeah, I added some Core Natural last week. I think that one's going to look more and more like Peabody soon.
Wait, Strazza is
options.
Strazza, is that a tradable low in the home builders, the XHB?
That's the question I'm asking, right? That's kind of what I was throwing out there. Like, when do you buy these things?
When Home Depot gets back above the former lows.
Hey, I think Home Depot, Lowe's, they have some great charts right now.
Nice day on Friday for the homies. Nice day for the regional banks.
Want to see it spread.
By the way, small cap Russell 2000 futures gapping up above the 2024 highs as we speak. Just throwing that out there.
What is Russell?
The Russell 2000 futures were below the 2024 highs last week. We are gapping above the 2024 highs as we speak. Can we do a little state of the markets? Check it out.
Finally.
Yeah.
Yes.
Yeah.
All right, ladies and gentlemen, we have the Dow futures this morning. The world's most important stock market index up 167 points. That's 47,250 for the Dow. S&P 500 futures up almost a full percent, 68.15, up 62 handles. And the NASDAQ 100 futures leading the way this morning, up 370 points. That's 1.5% to the upside this morning. 30-year bond futures relatively flat, just under 117 for the 30-year. Crude oil up 0.5% at 60. Copper up almost 2%, back above 504. Gold ripping this morning, back above 4,100, up 2.3%. Silver pushing 50 again, 3.4% to the upside today, with the VIX down slightly, but still at 18.5. Over in funny money land, Bitcoin ripping this weekend, up 1,700 points, 106,500. You got Ethereum a little bit over 3,600, up 1% on the day. You got the old Solana which I own none of. That's probably going to change soon. 170 up 3.3% with the total crypto market cap. Mr. Spencer Israel, 3.55 trillion. 3.55 trillion, up about a third of a trillion off the lows last week. How do we feel about that?
There's a lot of green on my screen today. Almost all green on my screen, in fact.
You know, I've studied bull markets throughout history, and one thing you're going to find is that stocks go up in price quite often throughout those bull markets. So this morning seems to be another example of that. Can you throw up slide 2? Shout out to slide 2. This one caught my attention over the weekend. Shout out Rachel. Rachel sent this over to me. I guess Rachel reads the New York Times. I do not. Can't trust these people. They're always lying to you.
Oh, wait, I saw this. Wait, somebody...
Opinion pages don't count.
Who wrote that?
Opinion pages don't count.
All right. Well, your parents' financial advisors are reading the opinion
Well, they're
pages.
not. That shit is thrown way in the back of the newspaper. You can't even get to it. You see how thick the New York Times is? Nobody's reading this garbage.
I like this.
Celebrities and stuff right in here. It's terrible. That's why like George Clooney complains about politics. Okay. Yeah. The opinion pages.
I like this. It's 1929 all over again, Strazza.
No, it's not. Nobody believes that. No one thinks that.
I actually think they do.
No one thinks that.
No. People think that, but Steve is right. You're really this is a guest column, a guest essay. Come on, this belongs in the garbage.
I'm a newspaper person.
I like it.
And I could tell you for a fact from reading newspapers for all my life that that's where all the trash is put. That's like page 6 of the New York Post. It's worse. New York Times opinion pages.
It's worse than page 6. At least
Rachel,
page 6 doesn't cost people money, but these liars are constantly costing people money, right?
I can't get over.
At least page 6, you know, it's trashy gossip, but it's not costing anybody any money.
Page
all right, throw up slide 4.
Page 6. I'll read that all day.
So Strazza, if this is 1929 all over again, then these transports aren't going to break out, right?
They have to break out. This is one of those.
What I'm saying, if they don't, it's 1929. Like for it to be 1929, they can't break out, right?
Sure. And small caps aren't breaking out either. Yeah.
Small caps aren't breaking out?
No.
Right. If it's 1929, right?
Sure.
Right. Agreed.
But it's not.
Do stock market crashes come out right after the top financial journalist in the world comes out with a book about the 1929 crash? Does that normally?
Gold digging in here today. I don't know. How do you think about this stuff so much?
This is what I think about.
I can't. I can't. I don't know. It's not. Transport's got to go. The small caps got to go. There's some other equally weighted indexes that you want to see complete some decisive range resolutions. But this would be one of those groups on a shorter list, or a list that's getting shorter and shorter and shorter every day. Ones that haven't taken out the prior cycle highs.
You know, I tried to read the 1929 book, guys. I really did. And I want to give myself a shout out for the attempt.
Yeah, how much?
JC, how do you have time to read, man?
And are there really real parallels between now and 1929? Like, are there anything that we could point to and be like, oh, that's similar? Nothing's the same. Markets evolve. People evolve, products and services, and economies evolve. Like, everything's actually different. The mix of the market is completely different. Like, we have situations today that we just frankly didn't have back then. They had the most important stocks of the day a century ago. We have the most important stocks of the day today. They're totally different. There's almost no stocks around today that were around back then. I don't even know.
Well, there is one constant, and that is human nature. So
you can study bubbles.
Spencer nailed it.
There is one thing. There is one thing that hasn't changed.
Spencer's right. Spencer's right. I don't have time to read so much. I do a lot of audiobooks. I do a lot of the audiobooks. So I got to drive to DC tomorrow. So I'll get 3 hours, 3 hours each way. You know, I'll probably be in meetings on the way back, but at 6 o'clock in the morning, nobody wants to talk to me, and I don't want to talk to anybody either. So I listen to the audiobooks.
I have a question for you. As I get older, I used to be.
Oh, I'm testifying. I'm testifying in front of a congressional hearing tomorrow.
Who is? What?
They called you in to fix the shutdown?
They needed somebody to come in and teach people how to count to confirm that it's a bull market. So I volunteered my services. So I'm going to show the senators and the House of Representatives, or whatever the fuck consists of the committee, and I'm going to tell them. I'm going to be like, yo, this is how to do it, right? You go 1, 2.
You're funny.
I'm not. They don't let me in that building. Can we throw up slide 5 there? So this is what I want everybody to do. Mm-hmm. And most of you are going to laugh at me. And I'm used to it. People are just laughing at me a lot these days, I guess, because I'm fucking crazy or something. These are 30 stocks. Zoom in there, Spencer, so the people can really get a good look. Really get a good look in there. Really give it a sniff, smell it, right? What are we looking at? We're looking at 30 stocks. This is the world's most important stock market exchange index. World's most important stock market index. Go through all 30 of these stocks every week, right? On a weekly closing basis. Look at the weekly candlesticks. And if candlesticks make your eyes hurt, I get it. Look at the line charts or the bars. I like the candles myself, but to each his own. I don't judge. 30 stocks. Then you got 20 more next. Then you got 20 more. This is the Dow Jones Transportation Average. If you get the 30 stocks in the Dow Jones Industrial Average right, and you get the majority of their direction right, you'll get the market right. Then you go and you turn to the transports. There are 20 stocks. This is going to tell you whether breadth is expanding or what breadth is deteriorating, and it's going to really confirm or diverge from what you're seeing in the industrials. And I'll tell you, as somebody who does this, we are in a bull market, my friends. Of these 20 stocks, pretty much all of them are going up. Practically none of them are going down. That is not bearish. So I do think the weight of the evidence supports the case for an upside breakout to all-time highs for the Dow Jones Transportation Average, which would be further breadth expansion, which would be consistent with a healthy bull market. I talk to a lot of people, Strazza. You know how many people do this every week and look at all these 50 stocks? You know how many? None.
Probably
I don't know anybody who does it. And it's honestly, I do it and it's like cheating. You know, like it's like I feel like I'm cheating the system by counting. So I would encourage you guys to cheat the system along with me.
Yeah, I just ran through them, and the transports do look better and better. You have some nice coils there. You really do.
But you wouldn't know unless you looked.
Yeah, well, all right.
So you can either go count or come to me and I'll count for you. Happy to do it.
JC,
Yeah, seriously, I just looked through the 20 transports while JC was doing that, guys. It doesn't take long. Get something like TC2000. We look through these lists all day.
It should take you 5 minutes. It takes me 20 because I'm a little OCD, but it's all good. Go ahead.
So hold on. Is this, and would you add the 15 utilities too while you're at it? Talking about all these meaningless, unimportant stocks?
Which ones are meaningless out of curiosity?
Transports, frankly. You want to talk about their market caps?
No.
Okay. Didn't think so. So would you add the 15 utilities too? And then
the answer is no. I don't care about your utilities.
Okay. So this is 50 stocks.
Yeah.
Aren't you better off just looking at twice that and looking at the 100 stocks in the NASDAQ 100?
That's something different because the NASDAQ 100 is not the stock market.
Yeah.
You don't have any financials in the NASDAQ 100. You have no materials, no energy, no industrials, no real estate.
I think it's more the stock market than the Dow 30. Nobody owns the Dow 30.
The Dow's way more diversified than NASDAQ.
The NASDAQ 100 is the most owned index in the world. Like so many investors have exposure or simply have portfolios that look a lot like the NASDAQ 100. By that, I mean they're weighted by Mag 7 stocks. Most people you talk to, go out in the world. Hey, what's the biggest holding in your portfolio? Apple, NVIDIA, Microsoft, Tesla even, right? Those are the answers you tend to get.
Those are the biggest holdings in the S&P 500, my dude.
For that, right? But there's 500 stocks. So I'm cutting your exercise in half, saying NASDAQ 100 is actually a very important index. Right?
I agree it's very important. It's not the stock market, though. I agree it's very important.
I think it's the stock market to most people.
Good. Fuck them.
Hey, I'll tell you, there's something going on here. I gotta complain. I don't know who to like book my complaint with, but does this happen in your guys' neighborhoods? This is the least Florida thing to ever happen to me. There is a woman coming by and looking through my recycling bin before the garbage comes and picks it up, and then leaving me like a piece of paper complaining about like what's in it. She's literally picking through my garbage and then complaining about the way that I'm recycling.
You know what you should do? You should put one of those electric traps so that if she touches it, it electrifies her.
In Florida, you could get shot for this shit. Like she's literally digging through people's trash.
You got to be careful with these Florida
leaving them notes. And I think that's absolutely crazy. So what I'm going to do is just never recycle again.
That's easy.
Everything just goes in the trash now.
Yeah. You should sit there on a lawn chair, smoking cigarettes and drinking Bud Lights and just throw your recycling at the lady.
No, but that's terrible. Whatever
that's some Florida man shit. Sitting next to an alligator on a dog collar.
All right. Can we talk to Kenny?
Yes, please.
All right.
It's been a long time coming. They ain't cuffing my clock, they tuck it. Putting up numbers, 99 problems, and I still kept it 100. Hola. Yeah.
Kenny Glick in the house.
Cheers.
Salud, dinero y amor.
Are you really going to Washington?
Yeah. Why?
I don't know. Say hi for me.
Q's up 10 handles this morning. We fading. If you ain't fading, you ain't trading. That's how I learned it.
I'm going back to my old days where if you had a Friday like we had, I don't even come in for the week. I just leave a note on my door, on my desk. See you next week. That's the kind of day it was. I'm actually strapped in, ready just to prepare for November 22nd, because if you don't know what happened on Friday, it was basically the faux show bro holiday. The entire market did a faux show bro. But before we get into that, you were talking about ways to remind yourself that it's still a bull market. Open, OPEN. If that stock wouldn't have rallied on Friday, then we would have been in a little bit of trouble.
Dude, that thing was up 25% off the lows,
Right.
closing in the green.
Of course it was, because that's the theme of 2025.
Here, we got to throw this up because this was too much. Throw up slide 2 there, Spencer, if you will, my good man. Look at that thing. Woo-wee!
We don't see it.
No, it's coming up. And remember, we're talking about literally some of the worst investors, maybe the worst investors in the history of the stock market are on Twitter every day telling people to short this thing. So,
well, I mean, you got two camps. You got the crazies who keep saying 50, 80, 120 on the name. Let's get over $11. But again, the last 3 or 4 months, they've all been wrong. The shorters have been wrong, but the longs have been wrong as well. But we've been right, because this stock is a day trading dream.
It really is, huh?
You're getting faux show bros and blow off tops almost every day in the same day. So that's why it's been our go-to name, kind of like Hertz, kind of like, again, when you have a name that treats you well, you keep going back to it. Like USAR, we trade the stock every single day. It's ripping all over the place. It's not about having those monster trades on Friday. It helps when you catch a nice bid and everything rips into the close, especially with the QQQ, the impossibility of it going down. And I think Friday was really, really significant. But there's so many takeaways from Friday that November 22nd, I'm going to do a class on what we witnessed on Friday. Because if you can understand the market mechanics behind Friday, understanding the fades, the dip and rips, the faux show bros, the blow off tops, the Kardashian bottom, and the Andy Dufresne, you had it all on Friday. So we're just going to review the 20 to 30 trades that we did on Friday. And if you could get a nice grip of what happened on Friday, then you'll be prepared for the next one we get. Because days like
it will
Friday,
happen.
But
it will happen.
Yeah, days like Friday don't come too often, but they come in different varieties. Sometimes everyone's elated and everyone's excited, like this morning, and we fade and we give it Jerry Orr back, or you get the faux show bro like we did on Friday. And it started so innocently with Coinbase showing some strength. Open was in its own real realm, but the market started coming back with crypto, and that just starts to spread.
That Coinbase looks great. That has risk reversal written all over it, dude.
Yep, the Coinbase spread into the hood spread into the quantums spread into the materials, and then next thing you know, we're full-blown rally mode.
Next thing you know, as it turns out, it was a bull market after all.
Yeah, and then once it starts getting over certain levels, I was planning on, and listen, I was short in the morning, and I was planning to stay short unless the Qs got over 602.50. And guess what? They did. And you have to cover and go long. So nothing's changed. Not one thing. The only thing about this market, what I want to short it, because if we're gapping up because the government has opened, that's a bunch of bullshit, because we didn't sell off because the government shut down. So they're just coming up with new reasons. How about we just say the market never goes down? Take care, everybody. It's just an incredible market with an underlying bid I think is going to last forever and ever. And
give me a name. What's on the move this morning other than the Qs?
Move. Exactly. MOVE. There you go. MOVE and Gelato, GLTO. So
Movano?
Yeah, there's some takeovers going on. GLOTO and MOVE, but and COGT, some of the big ones this morning. But you know what I'm going back to is I gotta watch Open. I gotta watch the Qs, but these are the crazy ones. But I think there's a combination. One of these companies bought out the other one, so they're moving in tangent. But I'm just going to wait. I'm going to wait for the fade. If the fade doesn't come, I'm just going to pretend that none of this is real, and I'm just going to go back, and I lost my car keys, so I'm just searching my house for those. That's what I'll be doing today, looking for shit. So yeah, I mean, especially if you had the Friday like we did, just chill. Georgia won. I heard the Jets won a game. I don't watch NFL football.
Allegedly.
Yeah, and Miami's beating the Bills. That's why you don't bet on
Miami smoked the Bills.
I don't understand. I don't understand the NFL. There's no good teams. There's no bad teams. But the one thing that transcends, I think it looks like the Giants might be actually worse than the Jets, which is hard to believe. But I haven't watched football, and I'm much happier for it. I'm watching teams that I don't care about anymore. So
Canes beat Syracuse. Dolphins beat the Bills. Just Miami just abusing upstate New York.
Good day. A good day for you.
Yeah, these people in upstate New York. It's nice there in the summer, but it's getting real shitty up there these days.
Oh, yeah, it's getting cold supposedly this week, right? Speaking of cold, I'm going to Iceland. Anybody been to Iceland? I'm curious to hear some places that you've been.
I hear it's great.
Yeah. So right now
great things.
We're doing the standard stuff. So if anybody been there,
Greenberg was just there. Ping him.
Oh yeah.
Yeah, he had some good experiences and some bad experiences. So he'll tell you what he liked and what he didn't like.
Yeah, cool. There's not much. The place is like this big, so it's like there's not much to do, I guess. But I'm sure there's a million things to do if you've never been there. So
yeah, no doubt. All right, Kenny. Final words of wisdom. What should be on the radar for today, other than the cues and a couple of names that you mentioned? Anything else?
Just the onslaught starts again tonight. Quantum names are going to Rigatoni's coming out with earnings, so that's going to move that entire sector. So keep an eye on those going into the close, and then we'll look for those gaps for tomorrow. So that whole sector, RGTI, QUBTS, QUBT, that kind of stuff. And if those start to fade again, maybe this market stays in this little range, but man, oh man, it's hard to stay short. So please be careful if you're shorting. And remember, if you are shorting is short-lived and you're going to die. All right, I'll see you.
Words to live by. Words to live by, particularly in a bull market. Shorting is short-lived and you're going to die. Something I think about quite a bit whenever I'm shorting anything. I ask Twitter almost every day, what are you shorting? I'm always looking for new short ideas.
Do you ever get good answers to that? I mean to ask you. You do?
Usually what the answers I get are the stocks that I want to be buying. So part of why I ask is to fade. Because if you ain't fading, you ain't trading. Throw up slide 8.
All right. And we have Dean in the house.
Woo! We got Dean Christian's in the house.
We do.
Dean Christian starting a new shop recently. Very, very curious to hear what he's doing over there. New York Stock Exchange Composite. This is the Spencer Israel. These are the stocks that trade on the world's most important stock exchange.
Right.
So this is a big deal. And the index made new all-time highs 4 consecutive months. Last month, it was relatively flat. So far this month is relatively flat again. Well-deserved digestion after 4 consecutive months of a new all-time high for the New York Stock Exchange Composite. By my work, this is a very well-deserved, well-earned digestion within the context of an ongoing uptrend that should resolve in the direction of that trend. And then one last thing, throw up that 3-month performance, that next slide there. Sector rotation is the lifeblood of a bull market. You hear me say it all the time. This is a 3-month performance. Notice what's up there at the top, Spencer. The old healthcare. And look what else is up there at the top, outperforming the major indexes.
I don't know. I was mostly looking at the
Energy.
bottom. I don't.
Energy. Look at the top. Look at the leaders. Look at the outperformers. When was the last time you saw healthcare and energy as the leaders? It's been years. You haven't seen it all year. You didn't see it last year either, but you're seeing it now. Because you know why? Because in a bull market, it's like, what is it? Like Bonnie Blue? What's her name? Everybody gets a turn. What is her name? Bonnie
Yeah,
Blue?
sure.
I'm
actually a little bit surprised to see discretionary that as high, but I suspect that's probably just a Amazon thing.
And Tesla.
Well, and that, yeah.
Oh yeah, and that.
Yeah.
Oh yeah, that whole thing. Remember, right. Remember your boy Tim Wallace over in Minnesota dancing.
JC, I'm long Tesla with you.
He was like dancing up there, getting his little rocks off with, watching Tesla stock go down, even though he's broke and always telling people how he doesn't own any stocks, but he has time to watch Tesla stock. If you weren't buying stocks when Tim Wallace is doing his little shimmy up on stage, stocks doubled since then. I mean, talk about Talk about a no-brainer entry.
We got Dean Christians in the house. The
There are
founder,
signs, guys. All you got to do is pay attention.
Turning Point Market Research is his new shop, and he sent us a few charts. They're already in the deck. Let's see what's on his mind.
All right. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Dean,
JC, how are you?
what's going on, my good man?
Not a whole lot. Just Monday morning, start of the week.
I hear you. So, before we get going, tell me about what's going on. Turning Point. What's happening here?
Yeah, before I joined Sentiment Trader years ago, I contemplated going out on my own and starting my own shop. And after 4.5 years at Sentiment Trader, decided to pull the trigger finally, and so started Turning Point Market Research. And we provide evidence-based research to institutional retail traders. It's our primary focus is on the stock market, although we will look at big picture items and other asset classes. But our focus is really trend, relative trend, and market breadth, and that's what we provide to our subscribers.
Well, tell me, what is the first of all, congratulations and good luck. It's not it's not the easiest thing to do, and it takes a lot of courage. So I commend you. A lot of people are scared to actually do anything. So the fact that you're out there doing things and building things, I have a lot of respect for that. Appreciate
thank you
for that.
Yeah, thank you.
And if you ever need an ear, feel free to reach out.
Yeah, I sure will.
Yeah, please. All right. So what's the evidence telling you? This evidence-based analysis that you're doing sounds like there's got to be a lot of evidence. What are you seeing out there?
Yeah. So look, the primary trend for the stock market is up. However, under the surface, the market breadth has been notably weak. And again,
Why do you say that?
Well, I mean, look, if you look at a number of different indicators, percentage of stocks above the 50-day, above the 200-day, percentage of stocks with a rising 200-day, percentage of stocks in a bear market, they're pretty weak. Okay. So here's what we did, JC. We looked at every single time the S&P 500 has recorded 31 record highs in a 4-month stretch, which is basically what happened from the spring up until October the 24th, which was basically about 2 days before the market peaked. And then we went back and we looked at every single time that has happened throughout history. And what we found is this last sort of instance here is notably weaker than the other instances. Okay. So again, percent above the 50-day for S&P 500 stocks at 53%. That's the weakest of any other time you've seen 31 record highs over a 4-month stretch. Okay. And again, 31 record highs, that means you're in an uptrend, right? Okay. But underneath the surface of the S&P 500, not every stock has been participating. And for us,
can I ask you something? In all those instances, how many of them had the United States underperforming by such a degree that we have now, right? Like you have more countries around the world hitting new highs than you have in, quite some time.
Yeah.
It's hard for me to say it's weak market breadth when you have so many stocks around the world hitting all-time highs.
Well, again, we're just focusing on the S&P 500 here, right? We're not looking at what's going around the world.
What about small caps? Small caps at all-time highs? Does it factor into this at all?
No. Again, this analysis is just looking at the S&P 500, which for us is our primary market that we look at. Again, we have this market breadth that goes back to the 1920s. So, we can look at what happens across all these cycles for, nearly a century of time. And again, when you make this comparison, what it's just saying is it's not a strong underlying market, even though we're hitting all these record highs as these previous instances. Again, does that mean that, the market's going to crash tomorrow? No, absolutely not. But what we've seen is just sort of a weak underlying trend. And again, if you think about what's been going on, there's obviously things like the 10-year sort of stubbornly remaining high. Obviously, the tariffs, or if you want to look at the shutdown, that's probably hit these consumer names here, and really exacerbated this weakness in market breadth, in the last couple of months. But again, for us, when you see this sort of just weak market breadth, you just need to pay attention and do some more due diligence and say, all right, what's going on here? Is this something systemic in terms of the economy, or is there like sort of credit stress going on underneath? And when I did that, JC, I kind of looked at what was making new lows and stuff. And like you saw, like within financials, it was a lot of insurance companies, right?
Yeah.
Okay.
Yeah. A lot of weakness in the insurance side.
Right. And but when you looked at, whether it's consumers, or if you looked at, staples, staples had like a third of them hit 52-week lows.
Dude, these food companies are getting smoked.
Exactly. And to my point though, none of this that I'm looking at is really systemic, right? This is not a systemic problem. It's disruption, right? Okay. We got the obesity drugs, right? Or if you got pricing pressure in terms of the insurance companies and they're getting hit. So again, what I've seen is this weak breadth it's not like alarming in the sense that this is a systemic problem for the stock market. And, I suspect it will resolve itself here to the upside in terms of, we'll see some catch up with these names. But again, I think just on a go forward basis, what we need to see is this a little bit of broadening. I'm not expecting the market to broaden out significantly. But I think we should see some bounce back here, and that will probably help, resolve this consolidation, which is really what it's been under the surface. I mean, if you look at like, the equal weighted S&P 500 consumer discretionary, I mean, it fell 8%. Okay. Well, in my view, that's a consolidation. Okay. So, if you look at like financials, they sort of peaked sort of August. Industrial sort of peaked in August, and they just been, going sideways to slightly down. And again, this is, structurally we still look fine, but under the surface, it's just something to keep in mind that, the foundation is not as strong as it has typically been in other uptrends like we've seen, especially like with these, these record highs that we've seen.
Well, I'll tell you two things. I think that the structure actually is stronger than we have because there's just so much demand underneath the surface that it's hard for stocks to fall too much. So I'll take the other side of that. But I think to your point, I think the best way to visualize what you're describing is the percentage of stocks on the New York Stock Exchange that are above their 200-day moving average peaked on September the 11th. That's 2 months ago tomorrow. Right. So I think that the churn that you're describing underneath the surface, some of those leaders correcting, some of the laggards catching up. Right. I think that one chart, that one data set of percentage of stocks above their 200-day peaking 2 months ago tomorrow, I think what you're saying is spot on there. Then when you look at it, looks pretty damn constructive. Looks like that line's going to be going up. In terms of the percentage of stocks above their 200-day, which essentially tells you whether they're in an uptrend or not, kind of like a cheat code there, right?
Yeah, listen, sometimes it just takes time, right? Okay, so we had this big correction, right? And there's a lot of macro headwinds here and there, whatever. And sometimes it just takes time. So let me give you two, a couple references. So the percentage of stocks above the 200-day, right, for the S&P 500 fell below 25% in the April correction. Right. It has not cycled back above 75%. Okay. Well, that's never happened in history. Okay. When you have these risk off environments and then you have this rip back higher, it usually always goes above 75%. We got up to 70%. It's fallen back down, whatever, it's 50 something today. When I look back in history again, that's never happened. Usually always go back above 75%. Now, the one time where there was a delayed reaction, JC, was coming out of 1998, right? And it took about 7 months for that thing to get back above 75%. So, we're roughly 6-7 months right now. So, there can be a delayed reaction. But, I think for this thing to be really sustainable and, I would like to see that happen. Now, may not, The other one is just the percentage of stocks hitting a 1-year high, 52-year high. I think we got 10-11% normally coming out of these corrections, and then once you start to break out, that typically gets up to about 18%. We haven't seen that yet. Okay, that doesn't mean it's not going to happen down the road, but again, somewhat unusual that we haven't seen this breadth, continuation and improvement here. Now, again, like I said, sometimes it's just a delayed reaction and eventually it occurs. So, That's just something to keep in mind, and we need to be monitoring as we progress here.
Dean, can you talk about the sectors? For me, sector rotation is the lifeblood of a bull market. The leaders you're seeing now are not the leaders you saw before. Healthcare and energy are popping up. You haven't seen that all year. You didn't see it last year either, right? So, rotation. Transportation stocks look great. Insurance stocks used to look great. Now they look terrible. Small cap technology is dominating. Right? People are like, oh, tech stocks, it's only the big ones. Like, no, idiot, it's the little ones. It's the little tech stocks that are dominating this market. So you're seeing new things. So very curious to hear what your thoughts are on sectors.
Yeah. Listen, my models right now favor technology, communications, and actually a little bit of utilities. Now, again, we all know in utilities, you don't own those in an uptrend. But, we do have this little AI thing, which requires a little bit of power. So it'll be interesting to see if utilities can continue to outperform. Listen, the last time they did in a bull market was like that 04 to 07 period, right? Okay. So there is a precedent for them to do it. But right now, communications and technology are the two dominant sectors. From that point, looking at all the other ones, you really got to drill down, JC, into individual stocks. You cannot blindly own, say, XLF. You cannot blindly own XLY or any of this other stuff. You really need to go down, and look at what is going on in individual stocks, even in technology, right? Okay, so look, what this table's showing me is my long-term dual trend buy system, right? Okay, it looks at trend and relative trend, right? And then it owns the stocks that have the best trends and relative trends. Even within technology, you got 29 stocks on a buy signal and 39 on a sell signal. Okay. So within even the best performing and one of the better sectors, you still need to make sure that you own the stocks that are in uptrends and outperforming the broad market. And again, you can find within these other sectors, there's stocks that look really good. I mean, energy obviously is not a place that, I've been really trafficking at all. It's got five buy signals out of 22 stocks, but, go look at a chart like Halliburton. I mean, Halliburton, that's come down.
These refiners.
Yeah.
Ripping.
Yeah, VLO. So, there are good looking charts, even within healthcare, which, again, was hitting something like, 3-decade relative lows.
Crack just closed at an all-time high last week, which is the Refiners Index Fund. Highest levels ever.
Yeah. So, there are opportunities if you drill down, but you really, this is a great environment. If you're like a long short manager, this is a great environment. Okay. Because there are a lot of crappy looking charts, and so, you can play the short side.
I'll stop you right there, Dean. Let me stop you right there. If you guys are listening out there, what Dean is talking about, Jeff DeGraff, who for me is the greatest that ever did it, he's on my Mount Rushmore. He's saying the exact same thing. You buy the leaders, you short the laggards. David Lundgren last week saying the exact same thing. The dispersion amongst returns there, particularly with the rotation taking place, right? Laggards turning into leaders turning into laggards. A long short book is great in this environment. Yeah, no,
I totally agree. Totally agree with that. Yeah, it's a great environment, it really is. And look, you can, and what you can see too, like, I don't know if JC, if you guys pay attention to that Merrill Lynch fund manager survey,
I
right?
do. I
okay.
like it.
But and then they also have another one that looks at mutual fund performance. Well, mutual fund performance is horrendous, right? Because, all these guys are owning these laggards, right? And the laggards are underperforming, and they can't own enough technology stocks, or they can't own enough of the AI ecosystem stocks because they're limited, in terms of sector weightings and what have you. But again, just to speak to the sort of the environment of if you're a long only guy, right, and you can't go short these stocks, right? You got to own a certain number of stocks in each sector and be diversified and yada yada yada. I mean, those guys are really some of the worst performance in a decade in terms of the mutual fund performance.
we know that professional asset managers are some of the worst investors in the world, right? 85% of them underperform. So we want to see what they're doing so we can do the opposite, right?
Right.
And you're a big sentiment guy. I wanted to touch on that. I'm seeing, I'm curious to hear what your thoughts in general are in sentiment. You're seeing the magazine covers, the New Yorker, the Economist magazine. These are some angry people that are creating these magazines, which is, I think, great for investors. You're seeing consumer sentiment, Michigan consumer sentiment, whether they're lying or not, historically. These are great. I mean, consumer sentiment is some of the worst ever. So if you're long stocks and you're betting on rising stock prices, nothing could be better than angry consumers that are as depressed as they've ever been, right?
Yeah.
What are your thoughts on that?
Well, look, I'm not a fan of that survey. Look, we're at a record high, and
is it? Hold on, I'm not calling your politics out, but just generally speaking, is it the right that hates that survey and the left loves it? Is that what's going on there? Kind of, right?
Yeah. I mean, look, I think what that survey is saying, there's some other factors in the economy away from the stock market that is really troubling the consumer, and
isn't that historically great for stocks?
Yeah. But when you've seen all those instances, right, you're typically in a bear market, right? You're near a low, and that's when you have that sentiment like it is. We're at record highs and sentiment's at record lows. So, again, there's no other precedent for this. So, again,
is it historically bearish for stocks, Dean?
No. When sentiment is very depressed, it's not bearish for stocks.
And I would agree with Miss Unique 65 over there about how sentiment is neutral. I would agree sentiment is probably somewhere in the middle in general. That one in particular is an extreme case in terms of historic pessimism, which is great. But generally speaking, most of them are somewhere in the middle.
Yeah, look, also,
right?
look, what we just saw here in the last week with, the leaders getting whacked. I mean, I'm sure people are pretty depressed right now. When your stock goes down 15, 20%, in a matter of days, Robinhood or Palantir or whatever it is, that right there alone will sort of turn you a little bit on the pessimistic side. So, I think sentiment, again, we all know that it needs to be bullish in a bull market. And it's just, you have to be careful when it starts to go significantly the other way as stocks continue to rise, because, when people are somewhat pessimistic, their tendency to continue to buy is less. So, again, for me, I look at the sentiment data and, but from a day-to-day perspective, in terms of investing, it really doesn't play into what I'm doing. I'm trying to find, what are the best stocks and the best sectors, the best sub-industries, and hold those stocks, and ride the uptrend.
Definitely. I'm totally with you. I like the sentiment to put into context, try to figure out where we are in the cycle. I like to see the pessimism from the consumer. Historically, It's great for stocks. So granted that to your point, that usually comes when stocks are depressed prices. Now it's coming at all-time highs. I still can't look at that as bearish when all these consumers are so pessimistic. Right?
Yeah. No, I'm not saying it's bearish. I'm just saying, look, it's different. And I think there's something in that survey, whether it's just the lingering like inflation thought coming after COVID, or just, who knows what, housing prices or something where, I saw the other day, the average person that buys a new home now is 40 years old. All right. Well, it was 30 for, 3 decades. And then all of a sudden after COVID, it goes to 40 because people can't afford it because house prices are up. It's probably something along those lines that is making, sentiment as pessimistic in a survey like that. So, again, I think you got to kind of just think about these other factors out there.
All right. Well, let's leave the folks with something. Let's leave the folks with something of value to keep an eye out for. You talked about, what happened, right? Technical analysis only looks at the past, Dean. I don't know if you're right. I know some people think they have information from the future, but us mere mortals are stuck with information from the past. But that doesn't change the fact that we're looking forward, right? So what's on your radar between now and Thanksgiving over the next couple of weeks? Like, what are you most interested in seeing?
Yeah, look, I think gold has had a nice little pullback, right? It looks like we're holding support. Structurally, those trends and like the gold miners, the long-term structure of those trends looks really solid. Short-term, they've gotten a little bit weak. So what I would look for is for those short-term trends to start to, sort of turn back up here. And potentially, you get another leg higher in gold and the gold miners. So that's what I'm sort of keying on here from now through the end of the year. And, again, I still think technology is going to be your leader. Okay. I think, like we were saying, if PMs are behind the benchmark, right, they're going to continue to probably buy the dips in technology. And, we've had several good pullbacks here, whether it's, like I said, Palantir and many other names that I think people will probably continue to go after.
Here, throw up slide 11 before we let Dean go. This is one of the charts that stood out to me over the weekend. Really tells a story, to your point, about technology. People are no, not that one. Shout out Japan with the new highs. Throw up the small cap. The small cap tech. There you go. So people are so obsessed about, large cap technology, and, they get all their panties in a bunch because it has such a high weighting or whatever. It's small cap tech that is the one making all-time highs last week, by the way. It's small cap tech outperforming the S&P 500, literally hitting 52-week highs on a relative basis. I think that's going completely unnoticed. To your point about technology, all the attention's on the big guys, but underneath the surface, the little guys are ripping face.
Yeah. Look, take the Mag 7 off your screen and look elsewhere.
Take the Mag 7 off your screen and the equally weighted S&P 500 and equally weighted Nasdaq making all-time highs. So how back at things be?
Right.
All right, Dean, you are the man, and please, like I said, anytime you need, you need an ear, feel free to call me anytime. Been there, appreciate what you're doing, have a lot of respect for that. Everybody, give Dean a follow, give him all the support. He's the man, provides great research. Good luck, my man.
Thanks, JC. Appreciate it. Thanks for having me on.
Got it. That's it. We're getting some chatter in the chat. Says JC, not everybody is rich. Yeah, thank God. That would be communism, you see. You need rich people and you need poor people, right? That's how it works. Right?
I think nobody would be rich. Not everybody would be.
Nobody would be rich. Everybody would be poor, right? So everything is relative in life. So, like for example, unemployment. Unemployment is too low. There's too many jobs available. That's inflationary. You need more higher unemployment would be better for the economy, right? And you're seeing it, right? People are losing their jobs because they can't keep up with technology. That's a good thing. There's nothing wrong with that.
We are like the Bill Maher's of financial shows. We'll have on anybody, right? We're there for the debate. I really loved that. That was a great interview, right?
Throw up slide 2.
Who are seeing different things.
Yeah,
Bill Maher had
too.
Marjorie Taylor Greene on his show last week.
Oh, she YOLOs a lot, right?
I don't.
Is she?
Yeah. She slings. Yeah, she YOLOs quite a bit. She's on that hot corner all the time.
All right.
Yeah, she slings. Here, throw up slide 2 there. How do you feel? Look at me, Strazza. Look at this. This is I'm putting my economist hat on. Okay. Right? Because people tell me, oh my God, this country is going to shit, and nobody can afford anything. I mean, I don't know anything. I'm dumb. I don't know anything. But I see GDP per capita going from the lower left to the upper right. Seems like things are going pretty well, no?
Again, it really depends on who you ask. That's
right. And then here's another good one. Throw up slide 12. This is a great one, Strazza. This is a great one. This one's right up your alley. Strazza's going to like this one. Strazza's going to like this one. Woo! Yeah, more than 25% of listed Chinese companies reported a loss in the first half of 2025. The highest share in at least a quarter of a century. Guess what? Yeah. Chinese stock market is up 30% this year, 3 times the performance of the U.S. And just to make it better, China outperformed the U.S. last year also.
Wait, I have a question about this data. Is this saying list companies that are listed in China or Chinese companies listed?
It doesn't matter. The point is,
no, it doesn't matter.
It doesn't matter.
U.S. listed. U.S.
Thank you, Steve.
The point is, they're lying anyway. None of this is true, right?
Yes, it is.
The point is, it further reiterates that earnings are a distraction. Valuations are making people lose their minds, like smoking meth. Right? People out there so obsessed with valuations, and then Tesla's making all-time highs and open, and these Chinese stocks that do nothing but lose money are making new all-time highs because they're so obsessed with valuations. It literally is like smoking meth.
Well,
it drives humans crazy.
The market's forward-looking, right? So it knew this situation over a year ago. China's been struggling. The economy over there has been shit. That's why there was such a massive drawdown from China last bear market. So I think it's all baked in the cake.
Spencer, we're getting some questions on diamonds as our internal diamond correspondent.
Huh?
I bought some this week.
Spencer, the rest of us are Gentiles. All right. We're gonna go to you for the diamond conversation. Right?
What's your question? Jesus Christ.
What do you guys call us? Goyams? Are we Goyams?
Goy. Yeah, you're Goy.
What does that mean?
You're Goy.
That's a cool
Yeah.
word.
No,
Sounds
it's
like
not.
It is.
Pokemon.
It's Yiddish, dude. Yiddish is the best
Goyams.
language of all time.
Wow.
Yeah.
Sounds like something in my spice
What,
cabinet.
what do you want to know about? I don't know anything more than you. What do you want to know about diamonds? I don't.
That's disappointing to hear, Spencer. Don't you have like an uncle or something that you can ask?
I probably do. Oh, Jason Purrs. Let's bring him out. Dear Lord. This went off the rails quick today.
Jason Purrs in the house.
Hey, what's up, guys?
Is diamonds are a commodity, technically?
Yes.
Technically,
What is the most expensive commodity in the world?
like today, like number.
What is the most expensive commodity in the world?
Water?
Water, maybe per.
No,
No.
not even close. There's a lot of supply, Spencer. I don't know if you heard.
Is it
Drinking
still
water.
diamonds?
Drinking water. Oh, no.
The most expensive commodity in the world.
It's still diamonds?
No, it's not diamonds.
Can't be anywhere near that.
I don't know.
You guys don't know?
No.
It's actually vanilla.
Vanilla.
Vanilla on a per ounce basis. Vanilla is the most. Saffron, just after that.
Oh yeah, saffron's. That's
super
getting hot
expensive.
now. That's getting hot now. A lot of
Saffron
people.
and vanilla, the most expensive commodities in the world on a per ounce basis. How about that?
One of the movie stars came out not too long ago talking about saffron, and then the prices just skyrocketed. And I guess the way you harvest it is it's a flower, but it's very rare, and it takes a very long time to get it. But I guess you can basically do it at your own house, and you still get money for that if you're really interested. So, might be something for us Goyim. Oh my God! That was
Let me ask you something, Jason.
Yeah.
SLV Silver ETF has the highest short interest ever. WTF?
Yeah. I have no idea what these people are smoking. Like, if we're talking about meth. That's a real thing. Maybe it's everybody's on meth. Maybe that's what the market is.
Have you been on Twitter lately? These are some angry motherfuckers. I think that they're just need their fix.
I mean, for real though, but it's crazy to kind of see people going short something like silver. Just makes zero sense right now. It's not the time to be shorting silver. Everybody's trying to do it. Everybody's trying to short gold. It's just not the time. Like, let it break the primary trend. Let the trend change. Yeah, there'll be little pullbacks, but damn, what is wrong with everybody continuing to short the miners and silver? It's crazy.
I got to tell you, I have been, and I've been saying it over and over and over again, very impressed with the way some of these silver's behaving. Some of these mining stocks have been behaving super impressive.
I can't believe the way they're holding up so well. And then the other thing we're starting to see is oil start to move. You know, that's something that's really interesting. If you guys want to throw up slide 21, you guys have seen it before, but you're going to get it again. You know, I always put this chart up and people then say like, hey, Jason, you know, why didn't you also talk about silver being in between this and so on? I could make this with like 50 charts, but yes, you're right. It's gold, silver, miners, and then copper miners, steel stocks, and so on. And then oil moves last. And still, I just want to reiterate one more time. I've never seen a cycle where all of these sectors are moving, whether it's uranium, lithium, you know, steel stocks, if we're talking about aluminum stocks. Basically across the board, all of these sectors are moving in a very big way. And oil's just kind of lagging behind. But we're starting to see some signs of life if we want to go to the next chart, chart 22. So finally, we started to see the bonds start to actually roll over a little bit, which was something that, you know, I've been waiting on because energy was holding up so well. And a lot of people were like, oh, yeah, it's done. Bonds are bottoming out. This is going to be the big rally in bonds and energy's done. For me, it was like, hey, energy's really held up really well, all things considering at the moment after a big run. I wasn't betting against it. I wasn't just getting long it blindly, but at the same time, it was, I think the bonds are going to roll over at some point. They're starting to roll over a bit. Nothing where I can say, hey, this confirms that we're moving another.
You're not getting oil and energy stocks rip into new all-time highs with interest rates falling apart. That ain't gonna happen, right?
Exactly. So like if we're gonna see this rally, it's going to be interest rates are going to continue to decline. Interest rates are going to continue to go higher. Bonds prices are going to continue to go higher or lower. And so we'll see TLT continue to move down and probably energy continue to move up. And that's the signal that you want to look in the intermarket relationship. This one right here is the most significant one. I think everybody who's trading energy should be looking at this chart. These are not going to move the same direction. I promise you that. That's one thing I do know. And then if we go to the next one, what we're seeing under the surface, though, JC, which is really cool, is we're starting to see the refiners starting to move. So this is the hard asset leadership. And when we're looking at this, we're basically seeing, okay, junior silver miners are at the top. We're looking at copper miners, uranium, battery metals, and so on. And then all the way at the bottom, though, we're starting to see crack, which is it signifies crack spreads, but it's also oil refiners. We've been talking about a lot of crack and meth today, so might as well throw some crack in there as well. But the refiners are starting to move as well, finally. So that's another thing that's going to be very interesting. And going to the next chart, you might like this one, JC. So we have hammer time right now, and if we have hammer time, I think that's a signal here, which is that it's not going lower here. Like things that are going lower continue to get bought up. We're seeing these that's a massive wick on a weekly candle. That's something significant. And we're seeing that same scenario play out in a lot of the refiners, especially the major ones like Marathon. So I think this is going to continue. I think the crack spreads are saying it. What the crack spreads are is basically think of it kind of similar to the yield curve, like how much money can be made from refining the products like gasoline and heating oil and other distillates over owning and buying more oil. So these guys print money in those periods of time, which is why we're seeing them move first. But usually when we have crack spreads moving higher, the whole sector moves with it. It's just the refiners move first. So I think we're finally at that scenario where, hey, we're ready to move here. I think we're starting to see some signs of life. I haven't been like super bulled up on it yet. I've just been like, keep it on your radar. But now I'm getting really bullish on the sector. What are you seeing here, JC?
Well, there's two schools of thought, right? There's the, refiners are the leaders by the leaders, right? And then there's but if you buy the refiners, you're not going to get the juice that you would get out of these little offshore drillers, right?
Yes.
So, I own both.
That's the way I do it. That
was my answer. So there's a valid argument to make for both of those. Like the refiners are the best, just buy the best and shut the fuck up. Or, well, the refiners are holding in there, but they're different. You're gonna get the juice out of the drillers because they got more leverage. All right, so own both.
Yeah, I think it's a good time to have that strategy. And once again, like the way I trade it, and this is probably similar to you too, JC, which is, okay, we're seeing the refiners move first. I'm going to buy the strongest ones in there. Great. And then I'm going to see the next ones move first. Maybe the drillers, maybe the small caps, maybe the micro cap names, whatever starts to move, I'm going to start to buy those as the signals come in and as we see relative strength. And that's really how you want to trade something like this. If you're not seeing oil really just ripping, and you can just kind of throw a dart at an energy stock and make money, you want to start to do it in a way where you can start to just buy the winners, continue to ride those trends, and then exit, and go to the next one after that. But I think right now is a good time to just buy the leaders. Buy the leaders, start there, and we'll see where we end up.
I got one more question for you, and then we'll do a little recess and get going. Market is open. Dow is up 300 points. Nasdaq's up almost 500 points. So we got trades to put on. Commitment to traders report, Jason. You as our expert in this world, are they going to give us one before Friday? Or are they going to do all the catch up on Friday? And are they going to backdate the data so we get all the fill in, or is there a gap and then we get the new data? How's this going to work?
Usually they backdate the data. Usually we do see the data kind of come in and next
thing fill it in. They don't just leave a gap and then you get the update. You get the full.
Usually there's once in a while where they have in the past, but most of the time they fill in the data. So that's
and why isn't us on the old block and chain?
Oh man. Don't get me started. I have no idea why we're still in the same space we are. Because here's an easy example is I still have to fill out my LTR reports. So they get the data still. It could just be going somewhere and updating automatically, but guess not. Guess that'd be too hard to do. It's the government. You gotta pay
why we need to give these humans jobs that machines can do much better. Get rid of the humans. We don't need them.
we know all the positioning in futures. We know it already. It's already in all the brokerage accounts. Everybody knows it. Everybody knows the position
in real time.
In real time, yeah. So it'd be very simple to change this. However,
short interest too, for that matter. So FINRA's not any better.
Oh yeah, yeah. But at least FINRA, we get it out there even when the government shut down.
Yeah, but they take 2 weeks. At least the CFTC gives it weekly.
Yeah, I mean, it's the only thing I like about the government is CFTC. You know, I get my reports, but I don't like the CFTC. I just like getting my reports, and it's getting frustrating. But at the same time, like I think what we're going to see is some of these positioning start to unwind. Things like oil will probably see a very large position in the commercials, meaning smart money of buying, and when those dips were happening. And now I think we're going to start to see a little bit of selling.
Let me ask you this: when we do get the data, are we going to get the data Friday? Or are they going to update it before then?
I don't know.
You don't know.
I would assume they're going to probably update a little bit before then. But the last time they did it, it was like a couple at a time. So this time I don't know if it's going to be like that. What are you looking
forward to the most? Like what have you missed over the last month? You're like, man, I would love to see where that's at.
Crude oil for sure. And
but you know what it's going to be.
I feel like I know what it's going to be.
You know what it's going to be. So that's not going to be
the dollar. The dollar.
Okay, me too.
On the top of the list. Yeah.
Me
dollar
too.
has to be on the
what
top
about I would like to see the precious metals.
Precious metals, I'm not that concerned because I'm sure the unwind is still pretty big. But I would put money that some of the smart money started to go pretty heavily during the shutdown, knowing that the data wouldn't be out there. So I think it's going to be an interesting one to pay attention to either way. But the dollar for me is everything because I'm looking at that. I feel like that positioning is probably unwound pretty hard. That's one I'm going to look at. I think it's going to flip back from the smart money being long, the smart money being short once again. And I think that's going to be the most significant thing I'll be looking forward to.
All right, let's do a little recess and let's hop.
Let's do it.
All right, Jay, what do you got?
For me, it's not even like a fun recess because it's literally kind of finance related, but I'm playing a basketball game. It's Friday night. I get done. I hop on my phone for 5 seconds afterwards, and I see this 50-year mortgage rate from Donald Trump. And so, like, you know, I don't usually bring up stuff like that during recess, but at the same time, like, it's like, okay, when's the last time we had something like that happen? 30-year mortgage rate. That was during the Great Depression. It's kind of interesting, JC, like we're all the way up at these highs. And we continue to see like you said, like the GDP per capita looks good. All these different indicators for the economy don't look too bad. The market's holding up. Like it's all reasons you would say, hey, the Fed's probably not going to cut rates here. And we're cutting rates. We're adding a 50-year mortgage rate. If there was and not to mention $2,000 per person is a possibility from the tariff revenue. So like if you needed any more signals that inflation's probably going to come back pretty hard pretty soon, and we're going to be making a lot of money in the commodities markets and at the gold rush, like there's your signal. So for me, great signal, excited. Also got the All-Star Charts guys been coming out and hooping with us on Fridays, so that's pretty cool.
Nice.
Yeah.
Nice.
We're gonna have an All-Star Charts team one of these days, man. I'll send you it.
I think if you're winning, you should enjoy it.
Mm-hmm.
You know, Strazza's a good example. Best year ever, putting up a banner year. He was enjoying it. He was down in the Caribbean doing his thing. You know, I had a good Friday. I had a great Friday, actually, in a lot of ways, not just in the market. It was just one of those days, just great day for me and my family on Friday for a lot of different reasons. And, you know, I opened up a nice Barolo, you know, had some ribeyes, had a lovely, lovely Friday evening with the family, started decorating for Christmas. And then, you know, a lot of guys I know, they complain because their wives go a little overboard with their Christmas decorations. Certainly mine fits the bill. You didn't hear that from me, but it's a nice little workout getting all that shit. I mean, the size of these what are the ball busters called? What are the ball busters? The big ball busters?
What's a ball buster?
You're asking me?
So what are you talking about?
Nutcrackers, sorry.
Oh,
the nutcrackers. These giant nutcrackers are bigger than me, dude. So I'm hugging these nutcrackers, carrying them up the goddamn stairs. It's a hell of a workout. So anyway, I don't complain. I actually enjoy the act of taking up all my wife's crap and taking it back down in January. I actually enjoy it. I get a nice little workout.
Nice. I think the Christmas tree decorating is probably the one Christmas tradition I always had a little FOMO about. Right, or not the tree, but also the lights outside.
How many days is Hanukkah? Hanukkah's like longer than a Chinese New Year.
It's 8 days. 8 days, 8 nights, 8 days.
You know better than me.
But we don't have the same level of decor that you guys do, which seems fun. My recess is twofold, real quick. If you are a big fan of movie soundtracks like I am, you'll love the documentary about John Williams on Disney Plus. It's called Music by John Williams. It's all about his life and career, and it's fantastic. So that's the first thing. Second thing is today at 2:00 Eastern time, Strazza, you got a special thing going on. Is that right?
Yeah.
I want to put the link out there. So the link actually is in the chat, and I'm going to throw a QR code on the screen right now.
I think Earlman's going to make an appearance too, so I'm excited. This should be fun.
So the link is in the chat. The QR code is on the screen. 2:00 Eastern time today.
We're going to give out a free trade too.
Oh, I didn't know that.
Wow.
Nice.
Yep.
Awesome.
Go in there and put a trade. That's the best way to learn the breakout multiplier strategy. Like, go in and actually put a trade on with Strazza. Like, just
come try it out.
It feels like, just,
No, so that'll be great.
Strazza, 50-year mortgages. As somebody who's looking for some real estate, does this like, do you need to be broke to qualify for one of these things, or can people who actually make money qualify for one of these?
You don't want that.
You don't want it?
Dude, that's forever. Fuck that. No way. No. 50 years? Why would you want that? You don't want 30. Who wants 25 or 30? 15 years.
The rate will be higher too.
Pay cash home.
15 years. Get done with it. That's a mistake I made with my first one. You can always accelerate the payment yourself, though.
That's
just pay more.
there's something to be said for that.
I've been doing that.
Pay twice as much.
Yeah, just pay more. Get rid of it. Get it off your balance sheet.
Yeah.
But 50 years, man, I'll be dead. I don't want that.
People talk about owning a home is the American dream. They're fucking lying to you. Those are realtors. It's not the American dream. If you can't afford it, rent.
Oh, we're done. We're done.
That's the American dream.
Let's get out of here. Thanks for watching. Smash the like. Go make some money.
How is that kid your son? Like, that kid is way too cute.
I don't know. He's too cute.
He's way too cute. Where did that? Are you sure you're the father?
No, I don't know. All right. Goodbye, everyone.
Later, guys.
I can't take no loss. I don't even know what it costs.